Woo! Hey everybody, we are already at 50% equity raise in this investment after only 4 days. The returns are exciting, but it wasn't only exciting to us. It was exciting to the other 20 independent tours that Ascend at Lakeview had. Now that we have a minute to talk a little bit more about the deal, I want to share with you some of how we got the deal. There were 20 tours for this deal. Who doesn't want a brand new 2021 construction and lease up? If you're an operator, you understand that in order to lease up, you have to give away concessions. You have to cut corners because that's what the builder's job is. They want to get their sunken costs out of the deal. So they have to get the deal prepped up and sold, right? Leased up and sold. So someone like me can come in. And so there were 20 people who were interested in the deal. 16 made full offers. Of course, it went above full offer ask. We made the final 3. And then it was mano a mano, me versus them. And you know what? We had a compelling story. I actually wired 1.4 million of my own money to the title company ahead of time in lieu of that meeting because I wanted to show how much I wanted to deal. And that is what got us this deal. And I'm really excited that I did that because of the 4x return potential in this deal. The reason why there's so much excitement, the reason why I'm putting $800,000 into this deal is that I haven't seen a deal like this in a long, long time. If you invest with me 15 years ago, together we made that life-changing decision to invest in real estate. And we discovered real estate riches along the way. And most of those investors, if not all of those investors, are now millionaires today because we invested in deals that had returns like this. You had a 4x return. And what does that mean? That means if you put $500,000 into a deal, you're looking at a $2 million return potential. That means you put $250,000 into this deal, you're looking at $1 million return. Here's your chance to get $1 million on this investment. Or if you put a $100,000 return, you get a $400,000 potential. The deal is amazing, but it's not just because of the full return. It's that there is a refinance component. There's a lot of questions on why we get away, why we're not doing these workforce housing, because they're dirty. And right now with inflation, right now with the up and down of the economy, the instability of that job market, they're the ones that are most susceptible. We are slowly graduating, transitioning away from that workforce housing where we have to knock on doors, take focus off of the deal and focus on just collecting what's already due. During COVID, we didn't have to do any of that. We had less than 1% delinquency from our Class A investor base. So it's only natural that we're starting to transition that way where it's the path of least resistance. But in this investment, there is a refinance component, which is just like those workforce housing. So somewhere along the way between year 4 and year 5, we're going to reset the notes. We're going to have it reappraised. Right now, we're raising $21.5 million of equity. Our leverage on this deal is roughly $52.5 million. We're going to go from that $70 million purchase price, and we're going to get to somewhere around we're going to get somewhere to around $120 million when we're done on the appraisal. When that's done, we're going to have the refinance ability to pull your cash out. So you've been getting paid along the way, then you get this big lump sum payment in year 4 and year 5. So if you're in Cedar Ridge Apartments last year, you know what I'm talking about. If you're in Green Meadows this year, you guys are going to get excited because we're probably doing a refinance in Green Meadows. If you're in some of those other deals where you've done a refinance and any of the other 13, 14 deals that we refinanced out of, you know what I'm talking about. We will invest today, and in year 4 to year 5, we're going to pull a monster share of our equity out. We're going to be playing with the house money. You're going to continue to get your cash flow quarterly. And then when the deal is done in 7 to 10 years, we're looking at a 4x return. This is something we've done at Rockstar over and over again. This we're probably looking to sell 4 or 5 deals. And in each of these deals, you're looking at 3, 4, 5, 7, 10x returns on the deal. Because every deal is different. You don't know what's actually going to happen. Some deals, you just hit it right out of the park. Other ones, you settle for a 4x return. Sorry. These are the kind of deals that help change your generational wealth future. These are the kind of deals that allow you to go on business trips, on family vacations and not worry about it. I'm going to go to Destin, hopefully tomorrow with my kids, and I'm not paying for that trip. That trip's getting paid off of the decision that I made 15 years ago to get into apartment real estate investing. That trip is getting paid for the 22 properties that I own today that send me a quarterly check every single quarter. That's what's paying for the trip. And if I decide I want to save for a couple more days, I'll just save for a couple more days. That's what generational wealth is. That's the choice that you are given later in life, the reward you're given for later in life. I really want you guys to invest in this deal. Again, I'm putting $800,000 of my own money in this. This will be the single greatest investment that I've ever done in any of the Rockstar deals. I'm excited to invest in a 2021 construction deal. I'm excited to get paid cash flow, to see a refinance event in year 4 to year 5, a 4x return at the end. I'm excited to experience the depreciation that we're going to see in this deal, where you get to keep almost all, if not all of your gains, and then do it again. This is what they didn't teach us in school. This is what mom and dad didn't teach us because they didn't know. I had to learn this from going to a real estate class, and I'm so excited that I paid that $10,000 like I did 15 years ago, where I found my earliest investors, and they've been able to invest with me in all these deals, and that investment paid for this next investment, that next investment paid for the next investment, and we've done this over and over. We laddered up our investments together. This deal fits right in line with that investment strategy. And I can't wait to put his picture on the wall next to the other 20-some deals that we have, right next to our Hall of Fame deals, the deals that we've sold and wound up with a 4, 5, 6, 9x multiple return. This is what we do at Rockstar Capital. This is why we self-manage. The team and I put together the business plan, we analyze the deals, and we manage it. We don't have third-party focuses. I don't own a construction company. I don't own a paint company or a landscaping company or other kind of vendors that could feed off of the company, because I don't want to do that. I want to focus on building your equity. Because if I did that, I'm actually taking money out of the property to build another business. I want to build this business. This is important to me. It's important to my children, and it's important to you. And I owe it to myself to not have any other focuses. I owe it to you to not have any other focuses than this investment, than this business that we're in together. I can't wait to fill out the other 50%. I know it's going to go quick. So if you're watching this video and you're on the fence about making a decision, it's not going to last that much longer. 4 days in, we've raised $10 million. That's a record already for us at Rockstar. It's going to go fast. So if you need to talk to me, if you need to talk to John, to Ryan, you need someone to help you understand the deal more, please let us know. 4x multiple. That means a $250,000 investment turns into $1 million. A $500,000 investment turns into $2 million. You're going to get paid cash flow along the way. Because it's a brand new constructed deal, we're going to have low operating expenses. That means we're going to keep heads in beds. And if you remember how you make money in real estate, it's not about the people that are moving in. It's about the people who aren't moving in, the people who are renewing and taking a gratuity, taking a rent bump, which is a form of gratuity for us. So we keep those operating expenses. And why would you move out? We're best in class operator. We've got 19 City, State, National Apartment Association awards. It just came out from the Houston Business Journal that we're the 12th largest property management company in Houston. That's a far cry from owning nothing 15 years ago. We're now one of the biggest and the best in this city, and we're going to continue to grow. I want to grow with you guys. Let me help you the way I helped all those investors 15 years ago, 10 years ago, 5 years ago that have experienced those refinance events, that have experienced the sale events. Let's own this together.